Why coronavirus could mean your EOFY tax return is bigger this year. July's in and it's tax time. The Australian Taxation Office has announced that there's going to be larger returns on tax refunds this year as compensation for the damage caused by the bushfires and coronavirus pandemic. And we're here to tell you everything you need to know in order to get the most out of your tax returns. Let's get into it. Number 1. We'll look into tax deductions offered by the ATO, reimburse working from home expenses, and the things you need to know on what all is actually covered. You can claim work-related household costs like heating, cooling, and lighting bills, depreciation of home office furniture and equipment like desks, computers, printers, and all the likes, repairing equipment and cleaning of the home working area, consumables like printer ink or stationery, and phone and internet services related to work. Low capital items like furniture or computer equipment which cost less than $300 can be written in full, meaning they don't need to be depreciated. Notice that any of these expenses has to be work related. For instance, you can't apply for a refund on your personal calls or streaming service expenses. Number 2. These were the things you can claim in your tax returns, and now it's time for the things you cannot. You might think you can claim a portion of the rent or mortgage interest if you're working from home, but that's actually not the case. This isn't allowed in the ATO policy. You also can't claim the cost of coffee, tea, milk, and other household items that may have been available at work. Any costs related to children and their education, including anything you needed to set them up for online classes like iPads or desks, items that you were reimbursed for by your employer, or the decline of value of items your employer directly paid for like a laptop or a phone. And finally, time you spent not working, such as time spent homeschooling your children or on your lunch breaks. Number 3. Now that we've covered what you can and cannot claim as work from home expenses in the tax returns, we're going to tell you what you need to do in order to qualify for it. First, you need to have spent the money yourself and not have been reimbursed by your employer. The expense must be directly related to earning income and fulfilling employment duties, which means things related to actually working from home, not just occasionally checking emails or taking calls. And finally, you need to have a record to support your claim like bills, receipts, or the like. Now, there's something very important to note here. If you receive reimbursement from your employer to cover specific expenses, you won't be eligible to claim these expenses. However, if you receive an allowance to cover general work from home expenses, you are still eligible, but you need to add that allowance to your income statement. Number 4. You now know what you can claim and how to be eligible for it. It's time to explain how to calculate the actual numbers. You have 3 options when estimating your work from home expenses. We'll go over all 3 of them in detail, but you need to do the calculations yourself and figure out which one is best for you. 1. First, there's the traditional actual costs method. As its name suggests, you claim the cost of things you actually paid for, and it needs to be supported by documentation like receipts and records showing your work-related use. A convenient way of doing this is using the My Deductions feature in the ATO app. This way you can keep all your records in one place. 2. However, the government has introduced 2 new methods to make it simpler for people to collect their returns. The first of which is called the shortcut method. Using this method, you can claim 80 cents for each hour you work from home in the period between the 1st of March and the 30th of June of 2020. The eligibility criteria is the same as we've mentioned before. You can claim money only for the time you actually worked from home, and you need to have spent extra expenses for the matter. The key thing here is that you don't really need to incur all of those expenses in order to qualify for the hourly 80 cents. You just need to show that there have been extra expenses in some of the categories we've mentioned, and you can claim your returns. You don't need a dedicated work area for this method, but it's important to note that you can't claim any other work from home expenses if you decide to use it. 3. The third and final method is called the fixed rate. It's similar to the shortcut method, but instead of 80 cents per hour, you get 52. However, this does not include phone and internet expenses, computer consumables and stationery, and the decline of the value of equipment. You need to separately include those. This would be better for you if your work requires, for example, a lot of printing and phone calling. So you can claim the 52 cents an hour and all the paper, ink and phone bills you paid for. This method requires you to have a dedicated working area and a diary that shows your working hours. You can apply the 4-week representative period across the rest of the year to determine your full deduction amount, but if your work pattern changes, you need to make a new diary. Note that everything we said in points 1, 2 and 3 applies to all the methods. This wraps it up for the 3 methods you can use to calculate your deductions. We know it's quite a bit to grasp. Make sure you go over it a few times in order to take everything in. Do your calculations and choose what's most suitable for you. Number 5. You should know that there's a dedicated portion of the ATO policy this year for protective clothing. If you spent money on protective equipment for work during the bushfires or the coronavirus, if you had to work in close proximity with people like gloves, face masks, sanitizers or anything of the sort, you can claim the expenses on your tax returns. Number 6. If you lost your job or had your hours reduced due to the coronavirus, chances are you can claim larger tax returns this year. The way this works is, before the outbreak, your employer probably applied tax to your pay, assuming you'd be employed in the same capacity over the 2019 to 2020 financial year. So if that's not the case and you're working less hours than you had been in 2019, there's a chance your payment statement will show that you've moved into another tax bracket if the income loss is significant enough, and then you'd be eligible for a bigger refund. Bonus tips. Now we're going to list a few things you should keep in mind. 1. If you're receiving the JobKeeper or job seeker wages from the government or your employer, you're still eligible for refunds on your work from home expenses, but you should include these wages as a part of your taxable income. If you're on JobKeeper, your employer should have already noted these payments on your pay-as-you-go summary. And if you're on Job Seeker, you should receive an income statement from Centrelink showing how much you received and lodge it when you're filling out your tax return. 2. Next up is the automatic offset. This is an effort from the government to relieve taxpayers, which automatically provides up to $1,080 off your taxes depending on your income. If you're earning less than $37,000 a year, you're going to receive a $225 relief or less. If you're earning between $37,000 and $126,000, you'll be eligible to receive the full $1,080. And if you're earning more than $126,000 a year, you're not going to be eligible for the offset. This is an automatic relief. You don't need to do anything to claim it. We just thought we'd let you know. 3. Final thing you should consider is if you're a couple both working from home. It can be quite tricky to calculate the actual expenses, but you can claim the shortcut or the fixed rates, each one individually. This should make it simpler, so make sure you discuss with your partner and see what your best option is. Bogus claims. For our final point in this episode, we thought we'd tell you that there are going to be consequences if you make any bogus claims. If the ATO finds out you've deliberately done the wrong thing, you're going to repay the amount of tax and pay extra in interest. It can even lead to prosecution if you provide any false documents. It's quite a serious matter, so only claim expenses you've actually spent and keep everything legitimate. That's it for this episode. We hope it helps you all out there paying your taxes. If you want to go over everything again real quick, you'll find a summary link in the description below. If you found the information here useful, hit that like button, and if you want to support us even more, buy us a coffee from the link in the description. If you'd like to see more episodes on financial advice, hit that subscribe button and turn on the notifications for our latest updates. Let us know if there's anything in particular you'd like us to make an episode about in the comment section below. We hope you all make it through this crisis with the least amount of losses. Stay safe and good luck.